Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 28th of July. Starting off with the FTSE 100, which is in this sort of rising flag that we've had for the last week or two. We've got the rising 200-day line. We had the 50-day line crossing down through a rising 200-day moving average, which suggests that we're in the run-up to a potential golden cross as the 50-day line curls up. The golden cross, or the run-up to that, is traditionally the strongest part in the cycle, and actually on many occasions that sell cross through the 200-day line when it's rising actually by the 50-day line is actually a buy signal in its own right, so that would have got you in somewhere around the 76.50 level if you'd followed that signal. If we break down below the 200-day line around 75.80, then there's a risk of going back to that July or June trendline break around 74.50 as the max on the downside, which is envisaged. Moving on to the DAX, and here we've been hoping for a decent end-of-day close above June and May resistance there around 16,300, 16,400. So hopefully we'll get a weekly close above that 16,400 zone, and then that could take us up to as high as 17,200 at the top of that August 2022 rising trend channel as soon as the end of next month. The setup is good, i.e. we've had consolidation at and above a rising 50-day line, and that creeping along or above the 50-day line tends to be a good continuation signal for recovery. RSI at 62, so nothing much to talk about there in terms of being overbought yet. Onto the Dow, and here a slight slip here with the market coming back to the old March resistance line. That was around 35,200. We were expecting something like that. In fact, we might have expected a bit more than that. The key here, though, is that this market stays above the June and initial July resistance around 34,500. Above that, it would seem that we are set fair on the upside with rising 50 and 200-day moving averages. Ultimate target here, 37,300, the top of that rising trend channel from back in August last year. So we'll see whether the Dow can deliver the goods. On to Bitcoin, which has been, I suppose, the most disappointing of the major markets here. We have hit the 50-day line quite hard. The good thing is it's rising, so that can be a place that this market will bounce, but really looking for a break of that resistance line from earlier this month. That's around the 29,800 level, and really need to break that, or preferably 30,000 on an end-of-day close basis, to then assure us that there's a new leg to the upside coming. RSI on the wrong side of 50, so it's at 42, so that does give scope for further downside. That could be towards the 200-day line at 26,600, but at the moment still just about favouring that we'll bounce around current levels either side of the 50-day moving average. Onto the stocks, and quite an exciting selection this time. We've got a bear trap gap reversal with AFC Energy, so we're back above the old June support there around 14.5. Above that, looking for up to 25 pence at the top of that broadening triangle from back in March, and the bear trap gap reversal accompanied by bullish divergence, which is probably our favourite and hence the most reliable setup that there is. Bear trap gap reversal off the lows tends to be the best turnaround signal for small cap stocks. Speaking of that, and probably the most unlikely stock to have that configuration is Canadian Overseas. Amazing after the journey, horrible journey that we've had over the last couple of years, I suppose. It feels like a lifetime. Here we've got a bear trap gap reversal, so we gapped up at the beginning of the week, and we've held that gap with a slight dip on Tuesday. That suggests we're going to head up to at least the top of that broadening triangle from back in June at 3.2 pence, and after that, who knows, the sky may be the limit, but bullish divergence there and that bear trap gap reversal, so that's the perfect setup, which is not something I thought I'd be saying with Canadian Overseas. Another stock which is looking quite solid at the moment is Capex, and notice one or two fans on Twitter. Here we've had a bear trap for the shares and a falling wedge break, so the little bear trap there on the 18th of July. Since then, we pushed through the 50-day line, which is already rising, which is a great sign. Suggests the minimum on the upside here will be up to 2.1 pence over the next week or so, and ultimately looking for a retest of the 200-day moving average area in April resistance by the end of next month. Upside value bar we hold above 1.5 pence, which was the initial July resistance, and I suppose you could also argue that we have a bullish divergence line there from back in March because of that bear trap that we had earlier this month. Good to see East Imperial doing its thing on the upside after its obviously majestic deal with Air New Zealand. Here we've got a U-shaped bull flag, as I call it, and looking for the shares to head up to 2.5 pence as soon as the end of next month. The 50-day line is already rising, so that gives us more confidence that the shares will deliver. If you're cautious, I suppose you wait for an end-of-day close through the initial July resistance of 1.5 pence, but I think there's enough there with the 50-day line rising, and that target there up to 2.5 would help holders quite a lot, one would suggest. On to what's currently the top rise of the day, which is quite impressive, or it was a few minutes ago. Emmerson, here we've had bullish divergence with the lower lows for the last couple of days, or Wednesday, Thursday, broken out of that falling wedge. And initial target here, the floor of that gap there around the 2.8 pence level, ultimately looking for the stock to head up to fill that gap there from the beginning of the month at 3.5 pence. Almost looks as though somebody's expecting some positive announcement from somewhere in Morocco on that situation. One of this week's big rises has been Graft Polymer, and here we've also got our favourite setup with the bullish divergence and unfilled gap to the upside off the lows. That means that we're looking for the shares to hit the top of that broadening triangle there from the end of April, and that could be hit at 3.75 pence hopefully by the end of next month. We don't want to see that gap filled though in the meantime. Onto a stock which I tweeted on yesterday, Great Southern. Hit our first target there at the top of that broadening triangle from January. That was around 2.1 pence. Above 2.1, we're looking for 3.5 pence as soon as the end of next month. Good uptrend line in the RSI window as well to back the move. And the upside value while we hold above the 2 pence level, which was May resistance for the shares. The stock that you won't see covered very much by anyone, I suppose, is Light Science. And looking at the back of the chart, you can probably see why. Here we've got a bullish divergence line. We've seen the shares break through the 50-day line at 1.1 pence. Above that, we're looking for the stock to hit 1.6 pence over the next few weeks at the top of a broadening triangle from back in April. So maybe there's some positivity there to chase, and especially while we're above that 50-day moving average. Moving along to Longboat, which is a great setup because it was an unfilled gap to the upside. It was a bear trap gap reversal. We've pushed higher pretty consistently since that unfilled gap to the upside in May, and we're looking for the shares to hit 36 pence hopefully over the next 2 to 4 weeks. But that setup so strong that really you'd be looking for the shares to hit 50 pence over the next couple of months as the situation starts to gather momentum. Stock which has taken a long time to get going but looks as though it's finally on its way is Nuformix. A lot of messy price action there. That final bear trap there below 0.21 at the beginning of the month, and since then we've got the rising 50-day line. We're breaking through the 200-day line and looking for previously suggested target 0.42. Maybe we'll get that by the end of next month, especially while we remain above recent resistance at 0.27. So impressive stuff there, and a bounce off RSI 50, which is also a good continuation signal. On to OPG, which has unfilled gap to the upside to start the week, and that means that we are chasing the top of that rising trend channel from back in, basically this time last year. That's heading towards the 12 pence level. Best case scenario is that we hit up to 15 or 16 pence over the course of the next 1 to 2 months, but maybe 12 pence by the end of the next month would not be too optimistic. On to a stock which is new to the market in the sense of its new name, etc., etc. Here we've got Streaks.ai, and you can see that we've broken a line of resistance there from the beginning of January and the 200-day moving average 2.55 pence. Above that, we're looking for the shares to hit the top of that broadening triangle from the beginning of the year as high as 4.3 pence, hopefully by the end of next month, even though it's just ticked down as I speak. But ideal, as I said, the ideal thing is it stays above 2.5 pence or so. On to a stock which I suggested might, well, rather ambitiously suggested that it might hit 0.95 pence by the end of next month. It looks like the way it's going, it might even hit it by the end of this month, i.e. by the end of Monday. Unfilled gap to the upside, got rising 50 and 200-day moving averages, and basically that bear trap there from back in June set the scene for the latest move. And 0.95 actually at the moment looks like it'll be a done deal. If you're a fan of the shares and looking for greater glories, then you may want to look at the trend line that I'm just about to draw now, which would give you the next target above 0.95. This would be by the end of next month, up to as high as 1.5 or 1.6 pence. And let's see if Upland can do that. Upside value while we hold above the 0.7 pence level, which is basically recent support and previous resistance for the share. So that is encouraging. Moving on to Versarien, which I also tweeted about yesterday as a standalone situation. Here we've had that gap down there back in the middle of the month. The top of that gap there at 1.74. So I think we've just about we hit that earlier today. Want to see an end of day close above 1.74 to then give us the 50-day moving average target, which is rising now at 2.1 pence. Best case scenario now, if we have a decent move through the 50-day line, would be back up to 4 pence and that March resistance line projection. So an interesting W-shaped formation with that gap there as well as a potential trigger for further moves to the upside. Finishing off with Zenova, which I can also seen has decent Twitter interest or social media interest. Here we had our favorite setup, the bear trap gap reversal. In fact, two gaps there, breaking through the 50-day line, which is now rising, so that should trigger further moves. And top of the triangle there from back in April as high as 7.5 pence expected by the end of next month. Sideways consolidations, sideways shuffles, as I call them, above the 50-day line tend to be very good continuation or recovery signals. That's it from me today. More updates over the weekend.